Hi folks, Nick here recapping the day, March 19th. It is a Thursday. This week is options expiration week for the monthly contracts, so be careful with the SPX and the RUT and the NDX. Anyway, and as far as what happened today, scoreboard, split decision. Meaning I could argue both sides of the fences. The Dow, minus 0.65%, down over 100 points. SPX down 0.48%, down about 10 points. The NASDAQ, however, barely up 0.1%, that's 4 points, and on the NDX. And also the small caps led up by being green, 0.22%, that's about 2.7 points on the RUT. Okay, and as far as arguing the point who won, who lost today, I can consider this a win for the bulls because there was no huge letdown after the huge run-up yesterday. And also that we saw some rejection of some lows here and there, spotty lows. I can also consider this, the other side of the fence, a win for the bears because they stopped the follow-through. There was no follow-through in the run-up from yesterday. Yesterday's pop was phenomenal. It was awe-inspiring from the low to the high and fast. And, you know, for example, we had Dow 18,000, NASDAQ 5,000, gold was up, bonds were up, oil was up, everything was up except rates in the VIX. So, and everything was down in the morning, so it was an incredible rip, yet there was no follow-through, major follow-through. All day, the strongest thing were the small caps threatening, I'm waiting, I'm breaking out, follow. Apple dragged the broader indices. They stopped the broader indices from running. If they had run, Apple is not in the small caps, but if had Apple ran to 130 or higher, it would have taken the broader indices with it, and then the small caps would have just followed just by psychology. So my thoughts again about yesterday, I want to go back to it. We keep rallying on the elimination of bad news. Eventually, we will need some bullish good news or bullish fundamentals on which we can rally. Not just, oh my gosh, she didn't raise rates, she's not going to raise rates in April, let's rally. Oh my gosh, Greece made the deadline, let's rally. These are shortable pops. I don't want to short them too closely so I don't argue with stupid. So that's why I keep saying we need new fundamentals. Had she offered us some new fundamental to rally on, then I'll say, let's go. Okay, so there was a point in time in Apple today where it did save the day. There was a point in time where, let's see here, here's a Apple during the day, early in the morning, and this is the markets, actually, the S&P, look, big drop right here, and then it was starting to look iffy, and right here, knock on the low of the day, it's like, it could have gone sour. That's 2077, right? And we ended up closing a lot higher than that. So, and then Apple, this is Apple, that's that same point in time, out of the blue, gets a bid. So save the day for a little bit. It could have been uglier. All right, that's just Apple. So this is as far as the scoreboard and as far as why are we rallying so much. The variables, obviously the biggest variable today this week is the federal rate hike and or you know the delay of which, or at least saying all she said yesterday, I'm not raising rates in April. Basically, that's about it. Moving on, that's one thing we've talked it to death. The strength of the rally yesterday should concern bulls because look how much fear was built into the rate hike announcement. Could this be a preview of how fast we're going to drop should the rate hike actually be announced? In other words, what if she had said, I'm not raising it in April, but I'm raising it in May? But she didn't. And the fact that she didn't, we ripped, 400 points probably from minus 150, 160 on the Dow to plus 270 or something like that. That's how much fear was built into the market over the announcement of a stupid little rate hike. So how much would it actually come down and how fast on the actual rate hike announcement? That's a question that should bother some people. Euro was, I believe, red today. The other thing is the QE in Europe, I don't know, on track, I guess. Oil is important to mention today. I think, remember I told you we're in a war, OPEC versus the West, mainly the United States, or mainly all the other new entrants that are going to change the game, are going to flood the, we're bringing in online so much new fuel that Saudi Arabia basically lowered the price low enough to kill all the new entrants. So they lose socioeconomically, meaning they suffer because that's their biggest source of income as a country or as a society. So their budgets get cut. However, their industries can survive on $7 oil, whereas we can't. The West can't. Tar sand oil and Brazil and Russia, I think they need close to $70 to make sense of it, and they borrowed money based on $70 or $80 or $90 oil. So those guys are in trouble. So though the Western industries suffer, but the Western societies thrive because it's cheaper cost of fuel. So having said that, this is phase two. Phase one was let's lower the price, and phase two is who's going to clean up now that we lowered the price to where everybody's getting killed? Who's going to clean up the mess? So Saudi Arabia or OPEC spoke, I think overnight or this morning, and they said it's up to the United States to control their inventory, meaning they're not going to cut, okay? They're saying that the West brought on board all this new sources of fuel, causing the problem, causing the war, and they should dial it down. In other words, stop pumping, stop extracting, lower the fuel inventories that way. We're not going to cut. They don't want to lose market share. That's the whole point of this. They want to control the market like they have been. This is one way of doing it. That's phase two. Pretty interesting. I just picked up on that today. Bonds were, let's see here, down today, and rates were up a little bit. Not a little bit, 1%. The yen was red, I think, last time I checked. The ranges are still in play. However, we are at the upper end, obviously, especially on the small caps. I'll show you that in pictures, actually. Let's go do it right now, folks. Okay, let's go visit the SPY. This is 1 year, each candle 1 day. Yesterday's candle, one fantastic candle. That's a big one. Today's candle, actually, let me zoom in a little bit so you can see it in more detail. Today's candle, a little iffy, meaning it left a tail on the bottom and the top. Not a bad candle, just you'd like to see some. It completely fits inside the other candle, right, in a portion of it. So you just wanted to see some follow-through. Doesn't mean the end of the world. It would be nice. Technically speaking, if I take a shorter period of time, there are technical reasons to believe that the SPX is going to rally another 30 or 40 points from here. Easy, just based on technicals. I don't know if I subscribe to the technicals purely on that. I don't know if I sit behind that right away, but something to consider. IWM, those are the small caps, really bullish candle as well. Why? Because it opened here and it closed here. So it opened at the low, closed at the high, following up on a big candle inside all-time highs. The only knock on it, the only knock that I can say is that it's a lower high than yesterday. However, it's a higher close, so, you know, one win here, one loss there. Overall, the most bullish out of all the indices. Volume almost matched yesterday, which is pretty important. Let me look at the volume in the SPY. Half as much as yesterday, which is good because it's a red candle, you know. Green, big, red, half candle, so not a lot of selling conviction. Undecisive candle on the NASDAQ. Volume a little less than yesterday, so it's kind of a meh, wait and see here what's going to happen. All right, so these are the biggies. Apple. It looks like I drew that little orange line right here. You know, it's got some challenges, but I don't underestimate the mighty Apple. You know, it's too high to go long. It's too hot to short. You know, you've heard me say it. It's still true. Okay, this is higher highs and higher lows except for this candle right here. So it's not time to ring the bell on Apple. I'd rather short other stuff like Tesla. I did short Tesla today. I did not tell you about it because as soon as I did it, Tesla dropped. It was up to $3. I shorted it and then it went down $4. Like, if I go tell them right now, they're going to be all upset. How come I was testing the market with a small short, and now it's very green. It's up 60% because I just didn't have time. I kid you not. I just pulled the trigger and immediately dropped. I don't know what he said. Elon was speaking. So here's my thoughts on Tesla, is that this support is probably now resistance. It used to be support, bounce, 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 broke, and now we're coming up to it. Is it resistance or not? I also think they have some issues to deal with down the line. So I took a short that has time. It's an April 2nd short, and I did a 180, 160, 150 broken wing. I basically bought the 180 put, and I sold 2 puts, at the 160, and then I bought another 150 put. So the maximum loss is the amount of money I pay right now, which was 73 cents, and it's now about $1.15. I can like quadruple my money. Ideally, I want price to fall to this area, and I make the most money. I don't want it to breach 160 by a lot. Otherwise, I start losing money again. But the maximum I can lose, it's a bearish trade. The maximum I can lose is the money I pay right now. But it's kind of like a modified butterfly. Butterflies are good because they're leveraged, but this one gives up a little leverage, but it's easier. The eye of the needle is a lot bigger. It's 180 to 160 in this case. All right, so these are the major goings on in today's markets. Let me see if I have any other notes I wanted to go through. We are in all-time highs, especially for the small caps, so keep that in mind. You did see that I took a short trade, longer dated via the SPX short, and I'm just trying to generate some income down the line. We are at 2090, and I'm taking a risk at June. 10, 22, 25, 22, 30. So, you know, I can see the accident coming and I can get out of the way. If indeed we're going to revisit this upper end, I'll see it coming, and as soon as the theoretical chance of success becomes to where I need to act upon it, I'll just defend it right away. I'll keep you posted on that one. All right, this is Nick signing out. If you have any questions, let me know. I know we have a lot of new members, so please do not hesitate to send in your questions. Don't leave anything in your mind that you can't quite understand. Go unasked, because I can't fix it if I don't know that you're struggling with it, and I won't share it with anybody, and we've all been there. So send in your questions.